Welcome traders to the channel. André Cardoso here. Thank you for being here as always. I want to share a couple of charts with you for today. Let's start with Euro versus the Japanese yen. We will also cover the New Zealand versus the Japanese yen, the pound, the New Zealand versus the euro, the silver, crude oil, SPX 500, Bitcoin, Ethereum, and the Nasdaq. So this is my purple list for today. I hope you enjoy. Of course, at the end of the video, if you enjoy the content that I share, press that like button. It's always important to get that feedback from you. Thank you very much. So let's jump into some charts. Euro versus the Japanese yen. This is a 2 hours time frame chart. We have a major range to pay attention to. The daily fractal resistance at 142.81, 137.38 as support. We are now trading at intraday daily fractal support forged at 139.93. I believe that a breakout of this level or a violation of this support may trigger a deeper retracement for the pair. We are also facing or approaching the 61.8% Fibonacci retracement at 139.47. That level may also offer some support. We are now approaching that Fibonacci retracement level. Even though in terms of advanced pattern formations and taking into consideration the last swing high and an extension to the golden Fibonacci level, we have that crab pattern projected at 138.15. The formation of that pattern will imply or suggest, not imply, but will suggest a bounce towards the previous fractal support, the support that we are now threatening to break below. So we need to wait for that weapon. Don't try to rush and anticipate a move to the downside, because I'm trying to plan a situation for the bulls and not for the bears. If you want to trade the breakout of the support, that's up to you. I need to see the formation of this pattern. I admit the breakout of this support may trigger that move to the downside. This is not that breakout does not offer me an edge to trade, something that I can repeat for the next 400 trades. So I wait for the formation of that crab pattern projected below. The New Zealand versus the Japanese yen. I shared this chart before with you. We have a double bottom. We can see this on a higher time frame, even on a 12 hours time frame, almost a daily time frame chart. Actually, you can go into a daily time frame and you can see that technical double bottom, even though we don't have a clear violation of the resistance. We have some candles closing above, but we don't have a clear breakout of the next zone for the double bottom. That pattern should target the previous highs, 87.75, but I'm now focused on the potential bounce from the current price zone. So we are now trading the bullish 26.18 setup. So we are trading the golden Fibonacci retracement level 82.51. This is, as by nature, potential pressure Fibonacci level. Let's see if there's a bounce from this price zone, eventually a retest of the previous major resistance again. Of course, we will wait for the breakout of the weekly fractal forged at 84.90. So a clear violation of a clear breakout above the fractal may trigger momentum to the upside. Note for euro versus the pound, I posted this chart before. The edge and shoulders printed above, right below the 0.9, the golden Fibonacci extension level. I shared this shark pattern, or this crab pattern, in fact, not the shark, the bearish crab pattern at 0.9. The price failed to complete, just by a few points, failed to complete the crab pattern, and then unfolds into an edge and shoulders pattern formation. So we have the previous support at 89.12, and the breakout of the support forced that expected move towards the 200% Fibonacci hit extension level. we should pay attention to, and that's what I want to call your attention to, it's a breakout or the eventual breakout of this ascending momentum or this ascending trend line support. So we are approaching a support price zone for the euro versus the pound. I will not ignore a bounce from this price zone, but at the same time pay attention to the breakout of the structure. If you track Fibonacci retracement level, you can see there is a 38% Fibonacci level right below the current price zone 88.13. So that's a 38% Fibonacci retracement level that may offer some pressure, some support for euro versus the pound, even though pay attention to the eventual breakout of this ascending channel. Euro versus the New Zealand also approaching a trend line support or a potential trend line support, but in this case we have also what we may call a potential symmetrical pattern projected at 68.32. So pay attention to this symmetrical projection. Of course, if the price finds support at this current at this zone, at this projected level, that may reinforce or that may help the reinforcement of a next zone or an eventual next zone. And if the price starts to bounce from there, we will start to track the potential head and shoulders pattern formation. For now, it's too soon to project or to predict that pattern. We are now focused on this projection, the symmetrical pattern at 68.32. Let's jump into silver. Completed a bullish shark pattern at the golden Fibonacci level, 21.95. So this is the golden Fibonacci extension of the last swing high, and that pattern completed also at the major 38% Fibonacci retracement from this monthly fractal, the previous lows on silver, and recent highs, the daily fractal. So we are trading the 38% Fibonacci major Fibonacci level. That being said, as you can see, the price already started to bounce. Of course, we don't know as I said multiple times, we don't know the outcome of those patterns. We know what the pattern should offer, and based on what the pattern should offer, and assuming the simple rule that we never enter the market to lose more than what we expect to win, and if you bring another variable to that list of rules or list of criteria, you always need to try to minimize your losses. So basically you trade for 6% above your entry. The maximum that you can use is a 3%. That creates kind of a 1-2 risk-reward approach for that setup. Fair enough to trade the bullish shark pattern, and eventually you can try to minimize our risk a little bit more. That Fibonacci retracement level, the 50% fib, that's the default target for the pattern. So this is not a random projection for targets. So this is what the pattern should do based on historical data. So we do expect, after the formation of the bullish shark pattern, a move towards the 50% Fibonacci level. Of course, you can also track other Fibonacci levels, specifically the 32% Fibonacci retracement at 22.90. So this is the expectation for silver. Let's go and cover also crude oil. After the formation of this bullish shark pattern, actually we have multiple shark patterns printed there, one of them at the golden Fibonacci extension, converging with this crab pattern that I shared before, the golden Fibonacci extension. Of course, we saw a very fast and violent move to the upside just to fill those default expectations for the crab pattern, and then we saw a violent move to the downside, and as you can see, the price has found support, has completed the bullish shark pattern at 224% Fibonacci extension, finding support a few points below at 72.18. We are now trading the 78.6% Fibonacci retracement, and we should pay attention into two different price zones. One of them, the current price zone, previous structural resistance, it may turn into a support, so we may see a bounce on crude without breaking the previous structure resistance, or we wait for the reinforcement of this fractal support again. So which implies, let's say, also the retest or an approach to the previous shining trendline support, the one that I started to track once we approach these lows again. I will not be surprised to see that move, a retest of this previous fractal support. If that happens, we may start to track the eventual edge and shoulders again. So of course, as I said before, we are far from that pattern to start to emerge, but one thing guides us to another. So a violation, let's say a recovery of this previous fractal resistance, that should trigger momentum to the downside or a deeper retracement on crude. And if that happens, we will pay attention to the potential reinforcement of the next zone, or that's the previous support. Of course, if that happens, the formation of the right shoulder then, and of course we will track that price development during the next sessions and the next trading days. For now, there's nothing very specific in terms of patterns to track on crude oil. Let me just update some of these fractals. The most recent resistance, basically the fractal supports right there, and we have of course the daily fractal right here. And there's something else that I need to change. It's a monthly fractal, it's already here. By the way, we have a new monthly fractal on crude oil, and the weekly fractal, it's already also above. So we have the weekly fractal at the previous lows from January, weekly fractal support to the top. We have the most recent daily support printed this week at 72.15, and of course the monthly fractal moves to the previous lows from December 9th. That being said, we have our levels updated on crude. As I said, nothing very specific to track in terms of advanced patterns. It's the same way as trying to project or trying to predict these eventual edge and shoulders patterns. So I can try to track. We can start to project patterns below the support level, and well, I admit that if the price breaks with some violence this previous support, it may print that pattern below. But we need to see, as I said, we need to see how price will develop for the next sessions, because trying to predict something that may print multiple or different patterns, it makes no sense. At this point, I'm paying attention to eventual bounce from this previous resistance on crude and the eventual retest or visit to this fractal support again. The objective, of course, of this chart is just to show you the result, or in this case the outcome, not only for this one, but in fact I have dozens. We have been tracking crude oil, and actually I didn't delete patterns. I'm not deleting any of the patterns that I'm tracking on crude oil since March 2022. So basically those are the patterns that I've been tracking on crude oil since then until today. So that's just for you to have an idea how the market reacts and how can we track those advanced pattern formations. So this is Crude oil, nothing to say, nothing to add. We will track that one and we will update once the price starts to emerge with something decent. SPX 500, I need to go into a lower time frame to show you what I'm expecting to see at this point, or at least at some point in the future. We have the golden Fibonacci at 40.32. So this is actually, you can go into a lower time frame, to a 1 hour time frame chart. 40.32. So this is the golden Fibonacci extension of the last swing high, not the one from the daily support. So I'm not talking about this previous swing high. I'm talking about the very last one, the rally that prints this fractal above. And we have a potential or an eventual bullish crab pattern also for SPX 500 at 40.32. As I said before, that crab pattern should target the 38% Fibonacci level. So the formation of the pattern will suggest again a visit to the previous structure and fractal support again. So that will not be a surprise to see a breakout of the support below, and then at some point the price will be forced to retest that same support level, turn it into a resistance eventually, and then we will see more downside, or we may see more downside later. But first things first, 40.32, so that's a golden Fibonacci level for SPX 500. Let's check Bitcoin. I've been calling your attention to these patterns before on Bitcoin and Ethereum, the one printed at 113% Fibonacci extension. We saw this ascending wedge printed above the completion point. As we can see, there's the 113% Fibonacci extension level, the price being pushed above the previous consolidation period. There's kind of a range here between the previous structure resistance and support at 20,362. Pushed above the structure, formed an ascending wedge, and then a breakout of that wedge. Fibonacci levels, 38% Fibonacci, retracement 20,900. So I admit a move to this Fibonacci level for Bitcoin, but very similar for Ethereum also. In fact, Ethereum is also breaking not an ascending wedge. This is kind of a parallel structure printed above. We have also the 38% Fibonacci retracement for Ethereum projected at 14,070. So that's the 38% Fibonacci retracement also for Ethereum. Another pattern that can emerge on Ethereum in particular, that's the one I'm more focused at this point. It's a bullish crab pattern, and that takes into consideration the recent moves on Ethereum. So this last swing high. So we have this very last swing high projected below, and this next sequence may help to complete the another crab pattern. This one also for Ethereum. There's a price 14.25, so that's a few points below, actually between the 38 and the 50% Fibonacci retracement levels. We have that crab pattern for Ethereum, and of course the same will apply here. The formation of the pattern will suggest a bounce towards the 38% fib, so exactly to the current price zone. So if we see a breakout of this support, we may see later a retest of that same broken support level. So let's wait for that also for Ethereum. And now let's check my last one, Nasdaq, just to finish my video for today. There's a couple of elements that I think we may pay attention to. First of all, we have the previous structure resistance. That resistance may turn support. In fact, the Nasdaq has found some pressure once we approach this price zone. We have also what we may call a descending or the recent channel, or the recent momentum to the downside inside this parallel structure. But we have also the structure support of this previous ascending channel. So we are approaching multiple elements of potential support. So we have the recent trendline support for this descending parallel channel. We have the previous channel support also approaching from the bottoms or from the lows, and we have the previous structure resistance, which may also turn into support. All that together with the very first Fibonacci retracement level, the 23% Fibonacci level at 12,320. So that's the Fibonacci, the first Fibonacci retracement level. So, and at this point, many people may start to buy the Nasdaq at this point. It makes sense. We are trading the previous structure resistance. If that zone turns into support, that may also trigger momentum for the Nasdaq. But usually I think on that process, not from the 23% Fibonacci retracement. I tend to think on those process at the 38% Fibonacci retracement for a trend continuation momentum. So the 38% Fibonacci usually offers much better let's say probability for strong bounces in the direction of a trend. So if the Nasdaq is preparing to trend to the upside, I believe the 38% Fibonacci may offer a better support. And another thing that we can add to that Fibonacci level is well, the Fibonacci is a strong Fibonacci level to find support, but we have also the previous structure in fractal printed a few points below. Okay, so if you make the question to yourself, if you want to buy the market at the 38% Fibonacci for a trend continuation trader, probably you will be forced to put your stops below those fractals, the first one, the second one, or even the third one, that depend on your target's projection, I assume, because you don't enter the market to lose more than what you expect to win, which means you don't enter the 38% Fibonacci to take a 4% move, and you will not put your stops at 8%. So basically you need to respect let's say the minimum or the maximum of a one-to-one risk-reward approach. So that being said, if you think entering the market from the 38% Fibonacci level, there will be a lot of stops positioned below the previous fractal, and it will not be difficult for the market movers to end those stops positioned right below this fractal. For that reason, I will pay attention, instead of searching for buy situations from the current price zone, which I admit, as I said, so we are trading a couple of elements of potential support, but instead of searching for that Fibonacci level, I prefer to search for the 38 or the 50% Fibonacci level. In this case, the 50% Fib, we have convergence between the 113% Fibonacci extension of the last swing high. And that opens the door to form one eventual bullish alt-bat pattern at the 113% Fibonacci, and that's the pattern that I prefer to wait to see if the price is capable to form. Of course, I'm not sure if the price will form that pattern or not, and that may offer me a much better, let's say, a much better price zone to try, or a strong Fibonacci levels at least, and based on the confluence of Fibonacci levels, that may offer me a much better price zone to trade to the upside the Nasdaq. For now, we are seeing this previous structure resistance, Fibonacci level, structure support of the descending channel, structure support of an ascending channel. So there are a couple of elements that may put some pressure on the Nasdaq at this point. And as I said, it makes sense to try to search for opportunities at this price zone, but As I said, I prefer to wait for a deeper retracement, eventually back to this 200 moving average. At some point the price will find this moving average again, and even with the bounce from this price zone, I will not ignore then the eventual pullback later. And I wish you all a very nice weekend with your families and friends. Thank you very much. See you next Monday.